good set of results. Headline earnings per share up 68%, boosted largely by your coal unit and the Mafube joint venture. Let's start on the coal side of things and your outlook going forward.
I mean, I think it's that our business has done exceptionally well. It shows one thing and one thing only, and that is the markets are coming back. If you look at our Eskom business, I think it continues to be a stable business for us because we continue supplying the coal to them. We've been quite blessed with the demand that has come back from ArcelorMittal on our metallurgical business, which has really made a great contribution into our coal business. And the big chunk of our business really that is battling a little bit, but has done exceptionally well on account of prices and other factors, is the export business. In terms of volume, yes, we didn't meet the numbers that we did first half of last year. We did about 1.8 million tons. But in terms of prices, I think that mitigated that kind of situation. And of course, the reason why we couldn't meet the volumes that we thought we would meet is a result of the Transnet strike that took place towards the end of the first half of the year, which really impacted our business. And secondly, of course, the battle that we continue dealing with, and that is the TFR issue and logistics issue. I mean, if you look at Richards Bay, the commissioning of Phase 5 only happened towards the end of the half year, and really the impact of that one was not that significant in the business.
And then rand strength. If rand
and of course,
strength,
I mean, you've taught us all that we shouldn't manage our businesses based on the currency. So I just ignore that one and really.
But if rand strength is here to stay, can you manage your business with a 7.25 level to the dollar?
You know, where we are today, we can still manage the business. We're still fine with the business. You know, a combination of various markets tend to assist and mitigate the pressures that you find in other areas. You know, we're not very much exposed on the export business. If for instance, we were doing 10 million, 20 million tons of coal, then the impact on the exchange rate would be severe. But our business is really, to a large degree, Eskom, and it's more certain as far as I'm concerned.
And gentlemen, before I open up to you, can I get in my mineral sands question? Every time you sit in that chair, I come back with mineral sands and ask for an update. Is there any chance that you're going to divest?
And didn't we surprise you today with a good result?
So mineral sands is right in your book?
No. I mean, this is one difficult business. It's part of what we found when we bought the business. We continue reviewing the business. Last year we said, as part of the strategy, we wouldn't spend more money on developing the Febris mine. And of course, that was necessitated by a number of factors. One, the economy. I think that it wasn't doing too well, and we were preserving cash, and we couldn't spend over R1 billion on the Febris mine. But the situation has turned. I mean, if you look at the stock levels around the world, they really have depleted. And there's lots of noises from various users of feedstock who've come to us and said, guys, please do something about this Febris situation. And we're listening to them. And of course, what we're seeing in terms of the market, for the first time in the last 20 years, pigment prices, because they've always been below 1,000 or well, 2,000 US dollars, they have moved beyond that one by over 20%. And the projection is that that's even going to grow higher than that. I mean, it's quite remarkable what's happening there. Of course, that one, of course, impacts the feedstock situation, which is your TiO2 slag and your zircon, all the others that related products on the mineral sands side. So I would say to you, it's a difficult business, but we continue weighing our options.
You're not going to deploy any more capital into
what we have done, just to ensure that we understand, we firm our options. We are spending a bit of money in terms of firming up the feasibility study, because at the end of the day, mineral sands, if you were to do something with that complex or any other of those complexes, the value that is brought about by a mine is huge. And if you were to take that one away, what is the point of someone buying just the furnace without a mine? If that were to be combined, there is a very release to the stakeholders that could be realized at the time. So we are weighing our options. We think it's a challenging business, but we've got it, and we've got to do the best we could. And this is what I think we are doing right now.
Bruce, Glenn, you've been very patient.
Surely, if you're finding clients are pressured with pigmentation prices, would they not be would they not potentially look at long-term contract prices, or is this purely spot that you're having to sell?
No, it's not. And in fact, this is quite interesting. The last few months, in fact, since this year, people are coming and saying, can we do a 4-year contract on your feedstock? Because it's starting to be very, very serious for them. And if you look at investments around the world, that we haven't seen much of that one going. It's been going down, down, down. And therefore, just like coal a few years back when people said, get out of coal, just like iron ore when people said, get out of iron ore, we think that this business could have a future.
Okay. Yeah, I think we definitely like the business. The set of results, I must compliment you.
You're the man.
I think
it's not just because you're sitting next to the CEO and he can whack you over the head if he just leans over a little.
I think the one nice thing is it's a bit of an oxymoron, but you don't get many defensive resource companies, and this is definitely one of those. And that splits, and there's an annuity stream from that Eskom contract, and I think that will hopefully continue for a long time to come, and that gives a stable underpin to the business. As far as the mineral sands go, obviously if you're coming off a low base, if you do manage to get it right and turn things around, that's going to provide a significant upliftment to the business.
Well, let's watch the space in the next 6 months. We think that the situation looks solid for the next 6 months, and I think the year-end results are the ones that are going to give us all, the market and ourselves, good indicators that this business has arrived or has not.
Talk to us about your base metal exposure, and especially in light of the double dip recession back in play, potentially. It looks as though the market has got very, very negative over the last couple of days, and it could be that there's just panic over a few data points. But what are you seeing? Well,
of course, the business that we hold is the zinc business, and we have made announcements that we will divest of that business. Of course, Anglo, who we are partners with at Black Mountain, have already announced their sale to Vedanta. We are in the process of following our own process of disposing of that asset, and we hope that that whole process will be complete by next year. So we're very focused on that.
And the general mining environment in South Africa, there's been, let's call it regulatory bungling of late. Are you confident that we have got all our ducks in a row on the Department of Minerals and Resources? Let me just put it very bluntly to you.
Put it this way, South Africa is coming from a different dispensation. We're in another era right now. There has been a need to make some changes in order for us to fit into the new era. That comes with its own challenges, like a revision of legislation, which its interpretation becomes a bit challenging, not for all of us, but for others as well who are playing in this game. And it's quite challenging for us. I mean, if you look at the recent examples, it's all about the interpretation of the law and how the loopholes that people see into the law. And am I confident of what we're seeing in South Africa? Yes, I am, because this year, starting last year, Labour, government and business decided to come together to look at competitiveness of the South African mining industry. And all the issues that are a problem or seem to be of great concern today are the issues that we're dealing with. Issues of capacity within DMR, issues of legislation, conflicts there, issues of logistics, and so forth. There's lots of them, and more investments into this one. It is quite worrying what is happening, because as you travel across the globe, you meet a lot of people, and if your job ends up becoming a defender of whatever is happening in the situation, which is not a pleasant situation to be in.
On that note, we're going to leave it there. Sipho, thank you very much for your time. That was Sipho Nkosi, the CEO of Exxaro, just reiterating the company out with interim results. Headline earnings per share up 68%, the stock closing up 1% today.